If you're not a regular investor, throwing $1,000 into the stock market can feel like jumping in with the sharks. Unlike with a savings account, every dollar isn't guaranteed to be there in a few months, but experts say that staying out of the stock market poses an even bigger risk to the prospect of building wealth than diving in. Put your money to work and add to it as often as possible with your long-term goals in mind. The best way to spend $1,000 is to invest the money in a way that will create a long-lasting impact and improve your financial health. In today's day and age, there are ample investment opportunities to choose from. Even a small starting investment can help lay the foundation for a long and profitable journey toward financial flexibility. When the stock market crashes or is volatile like it is recently, these choices may seem even bleaker. The good news is that some of the wealthiest investors in the world started somewhere. And although it doesn't get a whole lot of publicity, there are numerous options available for your small amounts of money. With that said, let's take a look at 10 ways to invest $1,000 in unpredictable times. Every parent wants their kids to be successful in life, and one path to success is college. However, college is expensive and is showing no signs of slowing down in the increase in price. Forbes contributor Mike Patton points out that college tuition has been increasing by a whopping 5.2% for the last 20 years. If you want your kids to go to college and you aren't rolling in the dough right now, you should probably think about saving for their college education. Currently, the best place to put college savings is into a 529 plan. These plans are available in all 50 states, and you can invest in any of the 529 plans you want. $1,000 is an excellent start in one of these plans, and depositing the money in such a plan will help get you the technical details of the account worked out so that you can continue to contribute. It has tax advantages that encourage individuals to save for college, but the states sponsor these plans, so be sure to check out your state's 529 college saving plan and see if it makes sense for you. One way to invest $1,000 is to open a taxable investment account. Think of this as a savings account, since any realised earnings and interest will be taxable each year. However, the potential upside is higher than that of a savings account. With this money, your investment options will still be limited, but opening an account is an excellent way to start. All investing involves risk, and there are no guarantees that you won't lose your $1,000 in the process. However, there are plenty of options available in brokerage accounts to help soften the turbulence of investing. Also remember that depositing $1,000 should only be the start. Investing works best with regular deposits, and the more frequent, the better. Once you establish a brokerage account, consider setting up a recurring deposit to continue building towards your financial goals. Everybody wants a pay rise. While many people are dissatisfied with their compensation, they may be overlooking an extra pay perk that their employers offer. That could be either a matching 401k or similar company-sponsored retirement plan contribution. If your company offers a match, the business will double your donation, usually up to a certain percentage of your gross salary. For example, if a company offers a 3% match, this will contribute $30 for every $1,000 of your paycheck. If your job offers it, it's a quick and easy way to double your money, not to mention a great way to save some dough on taxes, since your contribution usually enters your account before taxes. Besides, for 2021, most of the 401ks allow for $19,500 in total employee contributions. If you have $1,000 to invest, check with your HR department or benefit specialist about how to set the money aside for retirement. If putting your money into investments that risk losing the principal is something that you're not comfortable with, you can always opt to keep your money in your bank. Although the returns might be small, they're the best place to start building a nest egg. If nothing else, you'll never lose money on the investments you make. As a casual investor, consider investing $1,000 into a certificate of deposit, also known as a CD. A CD typically earns higher interest than a regular savings account. You can buy the CD directly from your bank, and you usually only need a minimum deposit of $1,000 to acquire a CD, which lasts for a fixed period, anywhere from 28 days to 10 years. However, you can't withdraw your money during this time. Instead, the bank pays you a set interest rate for the CD's duration, which will vary depending on the bank and the deposit amount. You can get these interest payments by cheque or automatically reinvest them into the account, also known as compound interest. If you want more control over your investments and which businesses you own, you should consider purchasing individual stocks. It used to be too cost prohibitive to invest in a single stock, as stockbrokers charged a hefty commission to buy or sell any shares. Recently, $0 commissions have taken hold of the investing industry, making it easier to buy just one stock or a few shares through some brokers. Many brokerages even allow investors to purchase fractional shares for those stocks with high share price tags. It's possible to own individual stocks in both IRAs and taxable brokerage accounts. Additionally, gains in individual stocks aren't taxed until you sell them, making this an ideal strategy for deferring taxes in a brokerage account. Well-established companies are paying annual dividends of more than 4%. AT&T, for example, has been one of the better dividend-paying stocks, and its current yield of more than 6% is one of the best. Making money with real estate might seem like a long-term prospect, but it's not. When you think of real estate investing, you probably think of renting a house or an office space, as it's the most common type of real estate investing. But not everyone wants the day-to-day duties of being a landlord or managing the spaces. There are ways that you can take as little as $500 to $1,000 and invest in flipping real estate contracts to make fast money. Real estate investment trusts, or REITs, function like stocks, and you can buy them on a typical stock exchange for a brokerage firm. REITs are also one of the few ways for new investors with little cash to acquire a stake in the commercial real estate market. Plus, you can buy or sell shares without having to worry about selling any property. With only $1,000, your best bet is to start with a publicly traded REIT, which require an investment of only a few $100s. Be sure to purchase an equity REIT as opposed to the more complicated mortgage REIT. If you don't have access to a work-sponsored retirement plan, or your plan won't allow you to add extra money, you aren't out of luck. That's where individual retirement accounts, or IRAs, come in. So, if you don't have an individual retirement account, take that $1,000 and start one. A personal retirement account is like a 401k that you open on your own. Because you're flying solo, there's no match, but you still get a host of tax benefits, including the choice of tax-deferred or tax-free investment growth. Another perk of an IRA is that it's easier to find one of these with no minimum deposit requirement. There are two basic types of IRA, traditional and Roth. A personal contribution to a traditional IRA is often tax deductible. Earnings grow tax-free until withdrawn. At the same time, a Roth IRA is an after-tax contribution, so it gets no deduction. However, donations can be withdrawn penalty-free, earnings grow tax-free, and those earnings can be withdrawn once you turn 59.5, so long as the account was established at least 5 years earlier. The age of robots is upon us, and the investing world is not immune. With $1,000 to invest, the fees that come with active management can be hard to swallow, especially given that performance often lags passive index or ETF options. That said, robo-advisors like Betterment, Acorns, and Asset Builder have hit the market, offering active management at lower expense ratios than prices offered by human fund managers. Robo-advisors are robot-powered investment managers. They buy fractional shares, which means you could own 10 or 12 ETFs with $1,000 and manage your portfolio as needed. Better still, many of them are geared towards small account balances with no minimum. You'll also pay fund expense ratios, but robo-advisors typically use low-cost funds. If you're looking to set up your investment and forget about them for a while, benefiting from an actively managed account, then a robot advisor is a great way to go. Once an IRA or brokerage account is open, it's time to start choosing where to invest. If you're just getting started, an exchange-traded fund or ETF is an excellent place to begin. Exchange-traded funds have made it so much easier to diversify your stock investments. They work very similarly to a mutual fund in that you make a small purchase of a whole bunch of different stocks. Where the ETF differs is that they are traded in shares just like any individual stock would be, so you can buy much smaller pieces of the fund and get a significant diversification. Besides, one of the essential parts of investing is to consistently practice good habits. By practicing this good habit with your $1,000 investment, you'll be practicing it for when you can make a $20,000 investment, or hopefully a $1 million investment, and be ready to keep diversifying regularly. With the best annual interest rates below 1%, putting money into a savings or money marketing account may not seem like much of an investment at all. However, millions of households don't have the adequate funds on hand in case of an emergency. If you're in that boat, this is a great place to start. Besides, there are tons of online high-yielding savings accounts that will provide you a better interest rate than what you can get from your local brick-and-mortar bank. These accounts will not get you a ton of interest, but they are FDIC insured, so you know that you have no chance of losing your money and you can withdraw at any time. A high-yield savings account can earn you much higher interest, going up to 20 times that amount. If you deposit $1,000 in a 0.06% interest savings account, you'll accrue only 60 cents. But if you put the same amount in a high-yield savings account that has an annual percentage yield of at least 1%, you'll earn $10. That's it for our video on 10 ways to invest $1,000 in unpredictable times. Let us know down below if you found any of the tips that we mentioned helpful and if you'll be implementing any of them into your own investing tactics. But that's it for today. If you liked the video, leave a like down below and subscribe to keep up to date with our latest content, and we'll see you in the next one.